Thank you all so much for being here. My name is Ina Cordle. I'm the managing editor of The Real Deal in South Florida. And we have a great panel for you today. Everything about the commercial market, a very important market for the South Florida area. And we have a great group of panelists. So let me introduce first Avra Jain, seated down at the end. She's the founder. Yeah. She's the founder of the Vagabond Group. Following a career in bond trading, she's developed boutique projects ranging from converting a 100,000 square foot warehouse to luxury loft condominiums in New York's Tribeca neighborhood and remaking the Vagabond Hotel on Biscayne Boulevard in Miami. Thank you. Welcome, Avra. Next, we have Lyle Chariff. Lyle's the founder of Chariff Realty Group, a boutique real estate firm principally focused on commercial real estate. He previously worked at Craig Robbins Dacra Development Corporation on projects in Miami Beach and the Design District for a decade before founding Chariff Realty Group. Welcome, Lyle. Next, we have Tere Blanca. She's the, if everybody wants. She's the founder, chairman, and CEO of Blanca Commercial Real Estate, a commercial real estate advisory and brokerage firm. Since founding the firm in 2009, she and her team have handled leasing and sales of about 8.5 million square feet, including more than 4 million square feet of office leases. Prior to launching Blanca Commercial Real Estate, she led Cushman & Wakefield's South Florida operations, and she previously worked at Codina Realty Services, Encore International. Welcome, Tere. And lastly, to my right, we have Jonathon Yormak. And Jonathon is the co-founder of East End Capital Partners, a real estate investment and development firm with offices and holdings in both New York City and Miami. Since 2011, East End has acquired more than $1.3 billion worth of office, residential, and retail properties, and the firm currently manages more than 1 million square feet of office property and controls over 1.5 million square feet of development rights in Miami. Prior to founding East End, Jonathon was a managing principal at both Rubin Companies and Broadway Partners and previously worked as a real estate attorney. Welcome, Jonathon. Okay, we're going to be talking about the commercial market, what you're seeing in terms of retail, office, all the commercial areas, types of space that you're dealing with, and how the market's changing. Let's first talk about retail. There's the idea that Miami is somewhat desensitized to the dire situation nationwide because of our tourist base and how everyone comes here to shop. But is that a reality?
You know, based on conversations that we had previous to this panel meeting, I would say that we are not in the same boat as everybody else. Miami happens to be a resilient city that I've seen. I've been doing this for 25 years. I started on Lincoln Road doing leases at $15 a foot. I was in the Design District when we were doing rents at $6 a foot. And today, you know, we are where we are. I've seen many cycles, things that have not really been defined as cycles. And the change has always been in a forward, positive direction. And talking to friends in New York and other cities, I hear a whole different tune. So I would say that we are immune. It's a different environment than anywhere else. There's really nothing like this.
But there are a lot of vacancies today.
There are vacancies. There's vacancies for many reasons. And as we all know, and the buzzword is that retail is, you know, as you said it with the F word in your publication, and it's off everywhere else. And I don't think that the vacancies are attributed basically to what's happening everywhere else in the world. There are vacancies because our spaces are changing. The needs for tenants that spaces were built for previously are not the spaces that are basically the right fit for the tenants today. And as retail changes, fashion retailers changing, we're seeing a different need. So I believe that the spaces that we have will get filled up as long as property owners and developers listen to what the market is really talking about and in need of. And that's the key, listening. And the good news is that everything's not built already. So it's a fluid program. We're able to listen to what we need, the direction we're going in, and adapt instead of repurpose.
Avra, what are you seeing in terms of retail?
Yeah, and I think, and what we're, I'm in the submarkets, and so when is it retail and when is it office? So when you talk about change in retail, whether it's the sort of Amazon effect, wholesale, retail, showroom, we're seeing that there's a shift, and having adaptable spaces certainly help. I mean, we're not in the mall world. I think that's a different challenge, but I think Miami, there is some immunity to Miami, but affordability is still a conversation. I think as a developer and even as brokers, I think we're working harder to make sure that the tenants are successful. So, and is this space the right place for them? Is this the right neighborhood? In our projects, we do some, what I call a curation, where you want to put like-minded people in the same buildings and so forth so they can feed off of each other. So I think that what's happening now is really more of a thoughtful trend, and to what you said, it's about listening. And I want to say that I think that even as developers, and we were having conversations, or as brokers, we actually have a lot more conversations than people realize. And that we do share information, and we do share trends, and we do share concerns, so that we do adapt. Because as we're only as good as everybody else does. It's not a competition. And so we do work together, and as Wynwood does, and Design District does, MIMO does, as Brickell does, and all this stuff. So we are listening. I think there is some concern, and Jonathon, you probably speak to that with some of the price transactions, and then, can the rent support the price transactions, because you're in Wynwood, so you can speak more to that. But I do think that the developers are listening, and I think the brokers are doing a good job of communicating that.
What is happening in terms of pricing and demand?
Sure. Well, I think as Avra mentioned, affordability on the retail side is almost as important as a broader discussion that frequently happens on the apartment side. Lyle has indicated that pricing has run dramatically. He's obviously talking over years here in Miami, but even in the last cycle, we've seen rents in certain locations double, and sometimes even go further than that. As an example, in Wynwood, going back to only about 5 or 6 years, you could still be doing deals at $15 a foot triple net in flex spaces that could be either warehouse, office, or retail. Now, on Northwest 2nd, as an example, there are people asking $120 a foot. So just to give you a sense of how rents have risen. But affordability is still important. The retailers really, at the end of the day, generally can't pay more than approximately 10 to 15% at the high end of the range of their gross sales volume. And if you start doing the math on a 2,000 square foot store, I mean, how many retailers generate more than $1.5 million in sales annually? Especially in a place like Wynwood, where you're talking about boutique retailers that are going to dominate a lot of the spaces. So we have to be very focused as we're building our spaces on how much we're going to charge to make sure that our retailers are successful, as Avra was pointing out. And in a place like Wynwood, which has gentrified and improved, we are at risk, really, of sort of destroying the fabric of what the community has been. So we need to be very careful to subsidize the right kind of retailers in certain instances. As national retailers enter the market, we sort of have to let them bear a little bit of the burden of offset to make sure that the pro formas work, but at the same time, we're maintaining the positive environment that was created in these individual locations, Wynwood just being one example.
Are tenants asking for rate cuts? Are they suffering and asking landlords to reduce their rates?
Well, speaking about Wynwood, I could definitely say you're seeing a lot of closings. A lot of tenants have opened, have closed. I think that's a function. Obviously, sometimes the retailers are failing because of their own business models, and it has nothing to do with the rents per se. But there definitely are instances where I think the tenant experience in the retail isn't necessarily bad, but the rent that was being charged was too high for the type of sales they were going to produce. just even if it was operated perfectly. So all of this has to come together. I think there's also co-tenancy issues are important. And as more vacancies reappear, it hurts the retailers adjacent to them. So until Wynwood, as one example, finds its equilibrium, it's also going to be harder for all of the retailers to survive. F&B is a huge driver. Everyone talks about experiential retail. And F&B is a dominant force that brings people to every location at this point in time, whether you're talking about Design District, Brickell, Lincoln Road, it doesn't really matter where you're talking, or even on the beach. Wynwood is definitely becoming a driving force for F&B in Miami as a whole, and I think ultimately that's really going to play well for dry retail and other types of uses that are going to be great.
Has anyone else seen rates drop? Landlords asked to reduce rates?
Some landlords have the ability to do so. There's very few property owners that have owned properties for more than 10 years, and acquisition prices were very high. They're not able to. That's the problem. And we also have other issues that are affecting what a tenant can pay with operating expenses. And we were talking about operating expenses. For example, on Lincoln Road, the property taxes have just quadrupled. And that affects the bottom line on what a landlord can see and what a tenant can pay. And it's just, we need a little bit of a balance. And we'll see what's going to happen. And again, it's a lot of different factors pushing in the same direction.
Let's talk about, you mentioned Lincoln Road. Let's talk about different areas. So in addition to Lincoln Road, what other areas are you seeing the most change in the market? The Biscayne Corridor, downtown, the Design District, Little Haiti? Why don't you speak, anyone who wants to speak about any of the areas?
Well, I think one of the most exciting areas in Miami is right downtown with what's happened with Miami Central launching the Bright Line passenger rail and the Miami World Center project delivering multifamily and retail along with the convention center and additional hotels. So you have a district of about 40 acres between Biscayne Boulevard to Northeast First Avenue that is currently under construction that will transform the whole experience for us in the next 3 to 5 years. In addition, Wynwood, of course, you're talking about food and beverage driving, a lot of that activity. It drives also a lot of what office users are seeking, right? Is that experiential 24 environment where they can live, work, play, and have everything, an elevator ride downstairs. And so I think neighborhoods like Wynwood and areas of Miami that are becoming very organic in the way that they're developing their experiences for both residents and the workplace are very exciting.
Yeah, and I think the submarkets are interesting. And we spend a lot of time there. And that's part of what's making us feel like a city. So like, when you talk about like New York, you go, oh, well, it's East Village, West Village, downtown, Tribeca. So now you talk about Miami, you talk about downtown, new downtown, Design District, Wynwood, Little Havana, Little Haiti, Edgewater, Mimo. So it's part of what's making us a city and it's feel like a city, and it's the connection. And it's especially interesting when each of these neighborhoods have their own identity, because that makes it interesting to tourists and things. One of the things that we've seen for the projects that we do, which is preservation, let's just say Biscayne Boulevard and MIMO, and probably similar to what people are feeling in MIMO, is a lot of the tenants that come to us are new to market, and they find us. They call us directly. And the reason why they call us is because a friend of a friend said, hey, we're looking for something interesting. I know this girl, Avra, right? So, but space matters because it speaks to their brand. So there are some tenants that will say, oh, I'll go somewhere, just because they're giving me reduced rents and whatever, and some developers. But the guys that are real placemakers, they don't want free rent. What they want is great space, and they want authentic space and a great experience. So what we're seeing is a lot of first to market in Miami, which I think is a really big positive. So we're getting the calls from London, we're getting the calls from LA, we're getting the calls from Brooklyn, and they're just trying to figure out where they can be and how they can do it. And they're looking for space unique space. So there, I think there's a lot of demand for unique space that speaks to their brand. So I think the submarkets are interesting, neighborhoods are interesting. I mean, you're seeing this too.
Yeah,
right, Tere?
and you're right on, Avra. There is such a difference between unique space and not unique space, reflected in vacancies and rates and how the rates are rising for the unique product versus not.
How do you define unique space?
So unique space, in my opinion, in the office world, needs to have an experience that ties it to the overall life of that building. So who's inhabiting the building, right? So it starts with how we're going to brand this building, who's our anchor tenant, who's going to be around it, create an experience for those tenants within the envelope of the building that's going to be pretty dynamic for their own business. Secondly, in Miami, great access is important. In addition to having great space, how do you get to it and how do you leave is important. Not everybody is walking, although we'd like to think that all of us walk to work. Well, many of us don't. So you still need garages. You still need to access the building. You need to navigate the roads to get in and out. So that's important. Also, let's talk about the fact that you've got now millennials in the workplace that really want instant gratification, right? I mean, and for me, I'm not a millennial, but I want it too, right? I work very long hours. I want to go downstairs, be able to shop, be able to eat, be able to, run the errand and not have to get in my car and have all the conveniences attached to it. Mass transit. We need mass transit connected because those don't have a car, and many are giving up their cars, want to be able to hop on the metro rail and get home. So all of these things make the space great. It's not just about inside the space, but what's around it, who's in it, and how are you relating to everything that is in the space and around the space.
Are you all finding that the demand is for that kind of space as well?
Unique
Yeah, I
space.
mean, I think people are picking where they live, work, and play all based on an authentic experience that enhances their own personal brand. And the personal brand can be one with your company, and it can be who you personally identify as and how you want to be seen, right? People have tattoos because they think it says something about who they are. It's an outward expression of their inner self. And where you office and where you live is the exact same thing. And that's exactly where we are as a society at this point.
Interesting. Avra, are you also seeing that in the hotel market? I know you're involved in the hotel market.
Yeah, so we're like boutique players, right? So we're little guys. But yeah, interesting. So the Vagabond we've never done hotel before. That was, we bought a beautiful building and then we were crazy enough to just turn it into a business. But interesting statistics. 50% of our guests are corporate at the Vagabond Motel. 60% direct bookings. What I think that speaks to is neighborhood, authentic experience. So I was sitting in the breakfast room one morning, and so I asked somebody, why do you stay here? They said, well, it was either here or the Marriott Courtyard. That's a no-brainer. So Vagabond became that substitution. So you're coming here for work, and you're going to go stay at the Marriott or the best restaurant around a bunch of other suit and ties, and you're working still. You stay at the Vagabond, and you're not working. So we're seeing on the boutique level, I think you're going to, on the Miami side, again, we're urban, very different. What I will tell you that's interesting, I've been getting a lot of calls because we own a fabulous piece of property on the Miami River from big hotel groups like the Nomad guys, Ace Hotels, Virgin, Seidel, all these guys, big guys, the money people, not operators' money. And they are all coming here to look to build another hotel. And I said, there's a lot of vacancy here last year. You could have stayed on the beach you could have stayed at the Edition for less money than staying at the Vagabond. And they said, you know what, Avra, in 2019, when the convention hotel is done, Miami's underserved. So we think, again, not knowing very little about hotels in general, just other than our little gem, the market has told us that in 2019, that the convention business is going to be a big resurgence. The hotels are already preparing for that to happen, and I'm sure that's going to spill over to Lincoln Road and retail and lots of other things.
Jonathon, you were talking about some statistics related to bookings for this season that I found to be pretty.
I know very little about hotels, but I happen to be working on something, individual project, and was talking to someone about the Miami market, and their comment to me that they had heard through direct information from the booking systems from hotel operators down here was that bookings were through the roof for this particular holiday season, and that Miami was likely to see the best ADR rate and overall occupancy that Miami has seen in potentially 20 years. And that's likely a function of, sadly, all the devastation in the Caribbean. So we could all be prepared potentially for some very good months ahead down here.
And a little extra traffic.
That's good for retail, I suppose, as well, right?
It's good for everyone,
So
except for the people in the Caribbean, obviously, which feel bad for that being the source of the success.
Absolutely, absolutely. There are a lot of hotels also coming to the area around the design district. And, there's about half of the stores are now open. There's still a lot more construction going on, a lot more stores coming, more restaurants coming. What are your views of the potential for the design district?
I'll take that one.
You're the only one qualified.
Well, I'm here to tell you, and I can't really speak about the hotels, but I can talk about the design district and let you guys know the truth, because there's so much chatter going on about the district. It's not happening. It'll never happen. Retail is off. And, one of the most important things for me today was to give this message. So I had the pleasure of growing up with Craig Robbins. He's been a friend for 45 years. I worked for him in-house for 10 years. And once leaving, he became my best client, allowing me to do all the assemblage of everything he now owns. And, you really have to understand, which I don't think anybody here, other than myself, can understand, that the design district is a creation of Craig's. Craig is a genius. He's been very successful at curating everything that he's put his mind to throughout his career. And the design district is DACRA. It is Craig's vision. You see tenants there, you'll walk into stores, and I hear people saying, well, they're not selling anything. Managers are saying, sales are down. This place will never happen. And what people don't understand is the genius thing about it as a developer is he was able to build a mall, which a traditional mall would be built with an entry, a roof, and nobody would see the inside of the mall until there was a certificate of completion. And what Craig was able to do was meet with people who believed in his vision, because I can assure you that every brand that's there has had a personal one-on-one with Craig and bought into his vision. And they're there basically understanding and sitting by his side and saying, you know what, we'll start and we'll be here for the long run. Whereas you have a lot of people that are talking about going into the district, but they won't go until it's finished. So what Craig was able to do was he was able to construct this whole neighborhood, get tenants in, start receiving rent, create somewhat of an experience for the city to see, and have the ability to make changes as he goes along. So the design district as it was slated necessarily won't be what we all think it was going to be or is going to be, and he's adapting. It's about an experience. It's about going to a neighborhood that has great programming. He's listening. It's about culture. It's about art. It's about food. As we know, retail used to be you would go to a mall and then there was the experience. Now you need to have the experience first to make retail work. And the design district, in my opinion, and I've been there since day one, again, buildings, we were buying buildings at $20 per square foot. When I started there, rents were $6 a square foot. When Craig told me that we were going to get $300 a foot on purchases, I thought he was out of his mind. He proved it to me on Collins Avenue. We've exceeded everything that we expected to happen there. And the design district will happen.
What are rates there now?
So that's a good question. asking rates versus what rates are bringing in, two different things. The last lease I did was in the $300 range. It was per square foot, which was a small space. Craig's spaces are $150 to $175 a foot, which is a blended rate for two-story spaces, which is another thing that was never done before. And, there's concessions being made. He's working with everybody. He's very dedicated. Nobody's leaving. So again, when you look at the design district, you need to first look at the DACRA project, what Craig's vision is. Everything around it including myself, were people that were following him. So the design district in Craig Robbins' project will definitely succeed. What happens on the outskirts, I really can't be sure because I don't know who's controlling that.
What is happening?
Time for the mic drop.
I bought into that vision. I mean, I bought on 36th Street the minute I knew that Craig was buying, and one reason why I bought there was because his partner was Louis Vuitton. I mean, you're talking about users here, guys. It's a little bit different than, it's just rents. These are owner users, and that changes the dynamics. And so, we bought a lot of property on 36th Street, and when I knew Craig was doing it, I knew he would get it done. So we're still there, and we've bought more property there. And think about the other things that have happened. Look what's Edgewater. Look at all the apartments that are being delivered. Look at everything that's happening in Midtown. Development is like an ecosystem. It takes time. Sometimes it's like in Biscayne, the residential was there. All we had to do was dust off Main Street. In Wynwood, you have the retail, and now you're bringing in the live portion. In Design District, you've got, there's nowhere else in the country where you have Louis Vuitton so close to a Target. Think about that. So, so what's happening, everything's an evolution, it's an ecosystem, and and the housing is coming, and I have full confidence.
And the difference is, how many business owners know what their business is going to look like in 10 years? Well, these companies that have signed up in the design district, they know, they've projected, they're thinking 10 years out. They're very comfortable. They know the direction and what they signed up for.
Let's move on to the office market. Tere, tell me the overall view you're seeing in the office market today.
I'm super excited about what is happening in Miami in terms of office development and the neighborhoods that are evolving to welcome office product, including, traditional neighborhoods in Miami like downtown, where you've had these beautiful buildings that are gems that have been left alone and untouched for 30, 40 years, and now we have great investors and owners that are coming in from New York, like Brickman Real Estate or East End or others that are taking these buildings and unlocking the full potential of these assets as the neighborhoods have continued to evolve, and so creating, spaces that are very contemporary and very adaptable to today's office users within an envelope that was existing, as opposed to tearing it down. And Avra, you're an expert at taking existing product and realizing a dream out of it. So I'm really happy to see that. Wynwood is a great example of a neighborhood as well, where you've got that play factor. You've got so much going on already that is attractive to any one of us. And so office is now following, as multifamily is following as well. In Brickell, it was kind of the reverse. We had for years a very active office market. It was very steady corporate users and the financial district, Wall Street of the South, and attracted anyone and everybody that wanted to have Miami on their business card. And then, guess what? All the condos arrived, and we doubled the population in less than a decade. So,
what size spaces are you seeing in demand for office?
It's really, it's the broad range, but Miami overall, it is a small tenant market in comparison to other major markets around the country. Our office market is also small, right? When we talk about Miami office, we're talking about 4 major submarkets really that drive the entire market, and they're about 30 million square feet. We may have 120 million square feet, but Class A, Class B, institutionally or privately held, that drive the market from a multi-tenant perspective, it's really about 55 million square feet. And so we have tenants ranging in size from as little as, 3,000 square feet to the 100,000 square foot users. Those are not very often seen in the market. Average size about 5,000 to 7,000 feet.
Avra,
But I would rather, right today, I would rather own a 20,000 square foot footprint than a 5,000 square foot footprint.
Well, every tenant is contracting because they're using space differently.
But we're seeing demand for larger spaces, and I mean, co-working aside, on the office side, we're seeing.
Well, I don't know how you define larger spaces. Are you talking about 20, 30,000 feet, or are you talking about 10,000 square feet?
We're talking 10 to 15.
Okay.
Yeah.
So, yeah.
I forget. Sometimes you're in the you're in the supersize.
You know, in
You're
a
the
high-rise
supersize.
building, a typical floor plate will be anywhere between 20 to 25,000 square feet, and those users that can occupy a single floor come around fairly often, but not as often as the 5 to 10,000 square foot users.
And we're seeing the complete opposite on the retail end. Smaller spaces, small's the new big. As the business model changes and the e-commerce and fulfillment changes, a small retail space and having a presence will allow a retailer to conduct the same business without having to have the extra space for a stock room, extra merchandise, and again, it's all about fulfillment. You know, go into a smaller space, see a limited amount of goods, some sort of electronic method of ordering, trying on, because everybody says, oh, I have to go and touch it. You know, Amazon's never going to take over this. And it's about, again, fulfillment, that delivery service that's going to be able to deliver your product to your home before you even get there.
Go ahead.
I would say on the office side that if you're talking about traditional office, there's no doubt that space that is, call it, under 7,500 square feet is by far the fastest to move, especially if, as an owner, you're prepared to pre-build it. We, on our office building downtown, as an example, built out suites that range from 2,500 to 5,500 square feet, and those suites essentially lease within 30 to 60 days after they hit the market. In the alternative, we have a floor plate that's 11,000 square feet that's raw, and it has sat there for a year and nothing is happening with it. So 70% plus of the demand is in 7,500 square feet and below. And so if you have a traditional office building, you really need to be catering largely to that market if you want to have any net absorption. However, if you're talking about flex space, which I think, Avra, is really a little bit more what you're talking about, which is space that can be retail and or office, at that point in time, you probably are better off having larger footprints because people have very dynamic uses. These are usually not traditional office uses. They may actually be like in the MakerBot community where they're making things and manufacturing things in the same place that they're holding their offices in. And in those contexts, you need more footprint. So we would say that if you're in alternative locations where your zoning is a little bit different, you can allow different types of office users. Bigger is probably a bit better. But if you're in a traditional office building, smaller is still better. On the rental side for a second, just in terms of rates, I think where we see the greatest opportunity continues to be in the retrofit and the improvement of Class B office buildings. Class A rents have run significantly, and that divergence between now where A rents are, which, putting markets aside, probably blended are somewhere in the mid-50s, and B rents can be as low as $28 up into the high 30s. And that disparity creates a real opportunity to outperform. If you were to buy a B building and improve it, you have somewhere between, call it, $36 and $50 to create value and push rents. And so as a business strategy for us down here in Miami, that's what we like to do. We think it's also hyper accretive for the environment overall because we're taking underutilized assets and improving them, making them modern, and speak to the current tenant base. And one of the other ways we're doing it is we also believe in creating a community. And so in every building, we are adding facilities like gyms, shared conference centers, potentially coffee bars, keg rooms, things of that nature that tenants can get together and actually collaborate and collide and have an opportunity to expand their own networks.
Who's the tenant mix? What tenants are you seeing? Are these new startups? Are these millennial-oriented companies?
It's all of the above. All of the above. I mean, in Miami, we're very fortunate to have a very varied cross-section of tenants from the typical financial services, professional services companies, as well as global financial market makers. Technology is arriving, media and communications. It's new arrivals from New York constantly arriving in Miami. Many of the people that are, many of the owners of real estate, residential real estate in Miami Beach are actually also living here quite a bit of time. So they're opening offices as well, secondary offices, and so it's exciting to watch the new entries.
I would add one thing. I think one of the challenges for Miami on the office space, and it's just really an employment-based issue, is keeping intellectual capital here. Coming from New York City, I see it from a slightly different lens, and there's a tremendous amount of smart people here in Miami, and I think even people who are educated elsewhere and who would like to return here, or people who might migrate here for a particular job, there's always a concern about what happens if this one job isn't here for me, what's next? Is Miami a diverse enough economy at a high level of employment such that my options are broad enough that I want to relocate and stay there? I would say going back maybe 10 years ago, I would have had a very bearish answer to that, and people thought that it was a very, very risky thing to come down and relocate to Miami, because I thought about doing it about 15 years ago and chose not to. But now, I think one of the things that has really changed that profile is the University of Miami is perceived to be an education institution that is definitely on the up and up and coming up and getting better. More graduates are staying here. And I think as a result, you combine that with, I think, more and solid employment growth at the high levels. And this is a sort of like a ball that's rolling downhill and gathering momentum. And I think that Miami is likely to hit an inflection point somewhere in the next 5 to 10 years where large companies will actually start to relocate here, especially if tax policy doesn't change to the downside on that.
Yeah, and the large companies may be the homegrown companies. So one of the things that we've been seeing, you've been seeing as a trend out with the millennials, is they're choosing where to live first and then trying to find a job. So one thing that Miami has going for it is lifestyle. So, there are people, I know, because some of them have worked for me, they came down and then they, may have taken them 6 months to find a job, but they chose to be here. And people are coming back. So I think that's one thing Miami has going for it. I'd like to know, Tere, when we're going to get a Fortune 500 company. Maybe you've got a secret for us. Or maybe a Fortune 500, or maybe we're going to grow it at home, because we're seeing a lot of entrepreneurs, and we're seeing the entrepreneurs grow.
So I read recently that Miami was rated the second city in the country for the number of millennials relocating into a city. So we're not doing badly in terms of attracting young professionals, and we see it every day. And it's not going to a WeWork or a Regis location or a Pipeline or a Bureau. I mean, I get resumes all the time from young people that are moving to Miami from all parts of the country, and I'm a small boutique business. So I believe what you say. And having daughters that are 25 and 21, I know that they move to cities where they want to work, and then they find a job.
So that brings up the topic of the multifamily market. There's a lot of more multifamily projects in the works, a lot of apartments. People think maybe it's an oversupply. I know you're involved, Jonathon, in a multifamily project. What do you see?
Well, affordability in Miami is huge. There's no question we have the lifestyle, and people do live here for that. But then they get here and they find it hard to find a high-quality apartment at a relatively reasonable price that matches their own affordability metric. And the condo market, the shadow condo market, is a huge component of the rental market that is shifting and changing. More and more people are building purpose-built rentals, myself included. And I think the way to make them more affordable, if we're not going to go the regulated route, essentially is to make them smaller. So your average condo in Miami is 1,200 square feet, and just by virtue of that size, it can be relatively expensive to rent. I think more and more developers are building units that are smaller. I don't think we're doing anything here just yet that would fit the definition of micro as it's used in a place like New York, which would be 275 to 300 square feet. But I think in Miami standards, people are starting to build sizes that for this market we could call micro, which let's say are 400 to 750 square feet. So as an example, at the Wynwood 25 project that we're in construction now on in Wynwood, we have units that are as small as 425 square feet. They're going to rent for as low as $1,400 a month. And we believe that's actually affordable, and that people who are making an average to high-level wage can actually live there alone and have an excellent quality of life. So there are more developers doing that. Example, the Vice project on Biscayne Boulevard downtown is another example of very small units, and this trend is growing. So to me, that is what also the zoning and our political leadership need to think about, how to encourage more of that type of development, how to reduce parking requirements associated with these small units, because parking is frequently a huge component of making development difficult in Miami. So there's a lot actually that I think the government could do to alleviate the affordability problem that isn't sort of like taking from one group and at the detriment of another. I think these are some slight policy shifts that could very dramatically and quickly enhance the types of improvement, development that would help with affordability.
Well, does anyone have anything else to add? I think we've had a fantastic discussion. I want to thank all of our panelists.